the Hedgeless Horseman here. It's September the 16th, 2025. I recently got home from Beaver Creek and Colorado School of Mines. And I mean, there's so much to digest. People have, asked me both there at the conference and as I gotten home, it's like, what were the best stories, what were the best takeaways, and I gotta say, it takes some time to digest. I mean, I think there's a lot of stuff that looks cheap still, and of course, I mean, the meetings I maybe met 20-30 companies. I mean, both officially and unofficially, where you had a one-on-one meeting and then you just run into people. I mean, it's not hard to get me to see a lot of the, above quality juniors as a buy, and probably most are, but it's always, since I'm, fully invested, it's not enough. I have to rank them, and then I have to decide, what of the holdings do I have, do I actually need to, or, could I sell some off, or maybe all, which one is the least cheap I own, to kick out for a new holding, for example. And that takes a lot of time, and it's very hard, since there's no way of exactly knowing how good the risk reward is or the actual value of something is. So it's just estimations, and sometimes there's more risk and uncertainty than others. I mean, if you find a super cheap, just pure development play that has no exploration upside, that's one thing, because the quantity is kind of known. Whereas, like, if it's a pure exploration project, I mean, then you're dealing with, the most amount of, not necessarily always risk, because a company can have a bunch of projects, let's say, where the target is very de-risked, but it's just a lot of uncertainty to go with, let's say, increased risk. So that makes it very hard. First of all, thanks to the sponsors. So I thought I'd maybe show some pictures from Beaver Creek and Colorado School of Mines, but I have to get them over to the computer, and if I probably could do it in an easier way, but usually I just email myself the pictures, and sometimes it takes forever for Gmail to get them, and my Gmail to get them, so I probably might do another video for that. But as you are probably aware, gold has kept on ripping. I mean, it's crazy when you see a small change, and that's like $100. We're getting to those levels, obviously, where a 1% move is getting bigger and bigger. So I mean, just looking at gold price, obviously I've shown I think the long-term RSI chart, for example, which RSI is one of few things I actually look at, not usually trade based off, but I mean, you could easily make an argument that this is a a trend line here, and I posted when it broke above that, which was around here, and yes, it's just it's gone up $1,000 since then, and obviously as a natural contrarian value buyer, I get nervous just watching this. I mean, I think I've said a bunch of times, I mean, I've been expecting a correction for the last $1,500 golden move. I just don't act on it. My contrarian instinct, as soon as something's, doing really well, you feel like, oh, crap, I'm not, the first one in, and there's too many eyes, and be prepared for disappointment, which a lot of people, I think that's the standard reaction since 2020, be accustomed, well, maybe not in gold price anymore, but in the juniors, for example. So I would say the sentiment, for example, at the Beaver Creek was, a lot higher than it used to be when I was there 2 years ago. You hear CEOs, being quite cheerful, making jokes, laughing, and quite a bit of, let's say, a bit more maybe drinking, partying, and companies having more cash in the treasury to actually afford to have some shots maybe. So you can definitely tell that there's more money in the sector. People are overall quite optimistic, and people are talking about their plans because they have money to to do something with. And yeah, so sentiment obviously better, which means that, as I've been saying for quite some time, I think the juniors bottomed out in 2024. But of course, that's just overall, let's say. I mean, the depression lows, the capitulation lows. From those levels, I mean, some juniors are probably up, I don't know, 100 to 800% or something. So for sure, the easiest, absolute easiest no-brainer gains, they are already behind, and obviously almost nobody actually buys those bottoms. And now the sentiment is getting, in fact, better. I mean, I'm starting to see some juniors that might rip, I don't know, 10 to 30% on, tweets or stuff like that, promotion in a sense, and it takes less and less to, get people to buy, because after moves like this is the GDXJ, but after, this kind of trend here, it feels like, it's easy to make money, or easier to make money, and people of course see this and they think it's going to continue, so it gets easier to convince people to get in the higher it goes. And yeah, we're starting to see quite a bit more pumping. I mean, I've obviously been accused of pumping many times since I got into this sector. I would, albeit consider myself to be, fairly conservative. I'd like to think so, at least. I mean, almost maybe frustratingly conservative, because I'm usually much more bullish on cases than it seems, but I don't dare to promise 10, 20, 30 baggers and stuff like that, and that's obviously what caters to a lot of people. So you're seeing a lot of let's say 10, 20, 30x potential gets thrown around on Twitter, and vast majority of people don't actually want to do any work. They just want to be told that you're gonna make 10x on this. That's it. I mean, that's enough to buy. Probably was how I started out as well. And now when we're seeing up moves like this, then it feels more realistic that they would actually just continue up. I mean, if anybody said something was going to be a 10 bagger down here, nobody would take them seriously. But when this is the recent history, then it starts to, people are believe it more. I mean, the more something goes up, the cheaper it looks. Well, not necessarily cheaper, but people think that now it's starting to matter that something might be cheap, because they're seeing revaluation happening. And I would just say, I mean, I think still discipline is needed, and I do think it's a wall of worry to climb, and I wouldn't be surprised, like today for example, I think a lot of juniors are not that strong, even though gold and silver was up 1% or something for a while. I don't know what it's up now. Gold marginally up, silver marginally down, and I mean, yeah, GDXJ is down 2.6%. So again, that's daily sentiment, and add profit taking, etc., and everybody's seen these moves, yada yada. And it might also, of course, be that sooner or later there's some money going to rotate. I mean, GDX has done even better. So you have that phenomena where the absolute largest miners, they start to move first, and they get priced up, and then it trickles down to the mid tiers, let's say, and then to the juniors, developers and producers, and last of all to move are the exploration companies. And I have shown this, this I think is, I'm assuming this is maybe First Majestic or something, a very levered silver play. I don't know how much of it is silver nowadays, but they simply have a long-term chart. So it's like at the depths here, you obviously would have wanted, when the next move is going to be up, which I keep saying. It's like the next move is for sure is up, and like I said on mining stock education, I think that was maybe last year or something, that the crash has already happened and people are still fearing a crash. Made no sense. And now we have some, juniors, developers, optionality plays, marginal producers. Some are up like 500 to 800% or something from the lows. And of course that was going to happen. It's just that nobody believes it. And I've said for the last, I don't know, 1-2 years, that's like, hey, the proven success, the beta plays, the ones with birds in the hands, they provide the best risk reward. And I've been almost frustrated that they do offer the best risk reward, because I started off, well, I guess first off I was an optionality buyer here. But since here, I mean, I've mostly been interested in alpha plays, exploration plays, and they're the very last to move. They're the ones that crash the most, together with optionality plays and marginal producers. But from bottom to top, they're the ones that simply can run the highest, because once sentiment gets hot enough and people start to price in blue sky potential, people are pricing in something that has yet to happen. The ones with the highest blue sky potential, I mean, they can, they can do very well, let's say. So I'm actually happy in a sense that we're starting to get into, where alpha plays makes moves. And my rationale being this, like take Amex for example. When that was trading at, I don't know, 100 million market cap or something a year ago or 6-8 months ago, I mean, I think they've spent like 130 million and 5 years or something at their project. And they've had, success. They turned that potential into that bird in the hand into bird in the bush into a bird in the hand. So I mean, if you can buy deposits for basically the same price or less than what it costs to prove up, and that's excluding needing to wait 5 years to prove it up. It's like, why be out there buying early stage exploration plays or exploration plays at all when it costs you, let's say, 5 to 7 years and 150 million to prove up something that's trading for 100 to 150 million right now. I mean, it's like you're skipping 7 years of wait, or 5 to 7 years of wait. You're skipping needing to raise 150 million when you can just buy it for 150 million, and don't even need to take, you're past the risk of them not finding something. I mean, then it doesn't make sense. If somebody pitched me, it's like, hey, what do you say? Do you want to invest in this? It's going to cost us 100 million to prove up. It's going to take us 5 years to prove up. And at the end of the day, your reward is going to be that the market prices it at 100 million. That makes no sense, really. I mean, then you really, really need to see exceptional exploration potential when you can buy tier 2, tier 3 assets for less than it costs to prove up. But yeah, so I mean, I think that made total sense. And but now I'm happy to say, when a lot of these have started to move, and some of them are still very cheap. I mean, there's for sure advanced explorers, developers, producers that are still cheap. They're not pricing in the current gold price, for example. But they've at least revalued. They're not as no-brainer cheap, and now relative to them, some exploration stores are starting to make sense. I mean, if you have something, a bird in the hand, traded for 100 million, goes up and trades for 400 million, all of a sudden it kind of makes sense to go looking for it, right? Looking for something that might get valued at 400 million instead of looking for something that if you spend 100 million, it's going to get valued for 100 million. And of course, that is, I mean, I enjoyed that part of the sector a lot more. It was just begrudgingly that it felt like, hey, the best risk reward is in the developers and smaller producers. And again, many of them are still cheap, and preferably, hopefully, they have growth in the pipeline. I mean, you could have Integra, for example, with 2 other projects in the pipeline, and Florida Canyon that should be getting better. So it's not like, well, there's nothing to happen there if gold price just stays flat for the next 5 years. No, they could increase their value a lot, and that's what I like to see. Quote, free optionality. But yes, the exploration stores are starting to make more sense. So let's say we're up here halfway, maybe, and some I would say are already maybe a bit higher than that, and some are lagging and lower than that. So it's all case specific for me, as you know, since I don't buy an index. And what was I gonna say? I mean, Red Canyon is one that's like, okay, they've advanced their project. They just announced today that they're commenced drilling. Look at the chart. Has this moved at all? Really? Has this participated with sentiment? Look at the volume today. 52,000 shares traded. That's absolutely nothing. The financing has not closed yet, but it was done at a 94% premium with a multinational company, which we should know when it actually closes. So I don't know what the market cap is going to be at that point. Let's say 11 to 12 million CAD. And that's of course a multinational taking a stake, and that money is being used partially to drill Kendall, for example, which for all intents and purposes is their flagship project. So I mean, again, I mean, to make it easy, okay, you see that there's not much hype at all priced in. It's not at a high. The projects have Kendall has been getting bigger and more de-risked over the last, let's say, 12 months, but the share price hasn't moved up. Of course, this is primarily a copper play, and copper is not at all-time highs, but still, I mean, just because I think it was already cheap, and sentiment overall in the mining space has gone up. Red Canyon is one that has not participated, and we can see there's no FOMO at all. And yet, if a multinational is getting in, it means that they're seeing dollar billion plus potential. Otherwise, why care, right? What's going to move the needle for a multinational? Well, that is 1 billion plus, depending on the size of them. I mean, Agnico is at 100 billion. I don't know what Newmont is. And then you have the whatever copper polymetallic majors. I'm assuming they're at, I don't know, 20 billion plus or something. So I mean, yeah, I mean, they need to see, big potential when they invest, and that goes for, I mean, that's how you make it real easy for yourself. It's like if a major mining company cares, that means they're seeing billion-dollar potential. You don't need to know what that potential looks like in a sense, because that's third-party validation. They have teams doing this. They do months of due diligence. They check up the management team. They obviously go on site visits and all of that, and they would know more. And they obviously care about, economic feasibility in the sense that they don't just look at how big a target is. They look at, could this also become a mine? So they do layers and layers of due diligence. So when you see one of those get in, it's not pumping to say there's billion-dollar potential. Because the very fact that a major is funding a junior or getting into an earning, whatever, that by default means they think there's multi-billion-dollar potential or billion-dollar potential to multi-billion-dollar potential. So that's the best kind. I mean, that's in a sense pumping with the truth, I guess, because it makes absolute sense. Because they don't care about anything that does not have billion-dollar potential. So yeah, now of course, is it high risk? Of course, but it's like, okay, if we know that Kendall, for example, is, or their portfolio overall has billion-dollar potential in the eyes of a multinational, okay, well, then we look at the share price or market cap. Let's say post this financing closes, when this multinational is going to get 9.9%, let's say the market cap is between 10 to 12 million CAD with around whatever it is, 2-3 million in cash, so enterprise value around 10 million for their entire portfolio, not just Kendall. If they miss on all targets and find no success, then one can say, well, it wasn't cheap because they found nothing. That's hindsight investing, of course. But if we look at a risk reward, I mean, how much more asymmetrical does it get than a 10 million market cap junior that's drilling something that a major is saying this has billion-dollar potential? And just the fact, which I'm writing an article about some high risk, high reward plays right now, and I mean, some of them, or the ones I wrote about so far, I mean, they all have 100% exposure to their flagship target. And obviously I think it would be easy for Red Canyon to do an earning deal with a major. But if they decide to not have an earning deal and let them invest instead, what does that say? I mean, I think there's 38% insider ownership in Red Canyon. So nobody else is more at stake, more to win or lose, let's say, than insiders, because they own 38%. And if they want to drill something 100% owned, whereas like they risk obviously missing and risk spending money and nothing comes out of it. But if they choose to keep it 100% to get exposure, that says something about how, let's say, how good the target is and how good the risk reward is in their book. That they're not, let's say, willing to give away up to whatever percent and decrease the risk. Let's say that they don't need to fund it, so they can diversify and spend their money at some other project, etc., etc. But obviously then giving away the upside potential. Usually, I mean, a lot of time that makes sense to do, right? Because 10, 12 million market cap. I mean, if they have 25% of something huge, that could be obviously 10, 25 bagger, etc. Anyway. So again, it's like I like to look for these clues, let's say, because these people, the insiders and the bigger companies, they know more about geology and mining than myself. So watch what they do and take cues from that. So obviously, I think the management of Red Canyon, the insiders, they think this is such a good project that they want to keep 100% exposure, 100% exposure of the risk and upside of drilling it. And there's a major that's going to fund them, so that they and I would think then also insiders think that, hey, this has $1 billion potential. So in my way of looking at it from a symmetrical risk reward perspective, Red Canyon is an absolute no-brainer. But at the same time, it is still high risk for all intents and purposes because they don't have a bird in the hand. So no-brainer for a play like this is still, don't bet the farm. Whereas like something that's low risk with, let's say, good upside, low risk, medium to high reward play might, I could have 10 to 30% potentially of my portfolio in it because you don't see a way of losing money. This is more like, if things go really well in Red Canyon, that could obviously be one of the biggest performers in the entire sector. But they could also miss on all of the projects and you make nothing. And that's, from a compounder perspective, that hits hard. So you need to be, in a sense, diversified. If it's 10% chance, you need at least 10 similar stories to on average have one success. And then that success needs to pay for the 9 that fail. So in a portfolio approach, I think still, high risk, high reward stories like this is a no-brainer. And of course, you can have a case where, or which I'm also writing about and working on another article talking about that. When you take high risk, you have to get high reward. So if you start off with too big of a position when it's the highest risk and the highest potential reward, it makes sense then to have a position where you can actually ride it higher. Because if you started off with a very large position, percentage-wise, if a high risk, high reward play doubles, and you need to have more than a double for your high risk, high reward portfolio to make sense. If you can't stand the pressure after it's up 100%, and let's say you sell everything, then you're de facto taking high risk, low reward strategy, and that's going to lose you money all the time, right? So I actually prefer to have, depending on the risk, of course, but to have a position where it's like it's not going to kill the portfolio if they fail. And I'm much more inclined to, let's say, maybe double down in case. Let's just have a scenario here And I'm absolutely not saying this is going to happen, because it's a very large target they're drilling. They can't really prove a blue sky or kill the target either, for that matter, on this upcoming drill campaign. But let's say they put in a hole and it shows like 500 meters of 0.8% copper or something, given the infrastructure and everything is great and all that. I mean, they probably don't need more than, I don't know, maybe 0.3% copper, 0.4 for that to be a success. Or let's say, 300 meters of 0.7% CU equivalent, or 400, whatever it is, a really, really good hole. I mean, that's gonna be the start of something. So if that doubles, that might be a drop in the sea in a sense. So maybe I should be adding even my initial position. Let's say that doubles, but the hole is so good they're only at 200 million or 20 million, and let's say you have a 1% position, it goes up to 2%, and you're like, well, this market cap now with this new information, this discovery hole de-risks everything. Now there's a much higher likelihood that they will find something worth 500 million, let's say, at least. Now let's say, now I think there's a 20% chance that they're going to find something worth 500 million. Then that's a expected value of 100 million, and it's only trading at 20 million. I mean, that's a no-brainer. That's a no-brainer from then on, and it's still, let's say, the potential is still it could go beyond that and be worth $1 to $2 billion. Then after it's doubled and the position is 2%, maybe I'm just throwing a number out there, and I'm not suggesting this probably with any early stage discovery story. Let's say it should be 6%. So after it doubles, I should still triple my position again, instead of doing what I think is a really big mistake most of the time, where you go into a high risk, high reward drill play, you have too big a position, and then it doubles, and you should be adding in a sense, because the risk reward might be even better, but you're selling half for everything. So taking, not that 100% is necessarily low reward, but it's for sure it's not going to pay for, let's say 9 times out of 10 juniors miss on their initial drilling and you get cut in half. So I think that's something very important to think about, because otherwise you can have a paper strategy of a high risk, high reward portfolio, but if you in practice can't capture the high reward, you have a high risk, low reward strategy, and that's obviously as it sounds, or it's as bad as it sounds. So this is I'm working on an article here, just going through Red Canyon. Then Cobria Exploration also has a major target. As Kendall, close to surface, huge potential. And like Red Canyon, I believe that Cobria has no problem, would have no problem letting a major earn into this. But it seems that, hey, they have such high conviction for El Perdido especially, that it appears excuse me, it appears they want to have 100% exposure to it, and they have a bunch of other projects. Then Westward Gold, same thing here. I believe that they could easily get an earn-in with a major gold producer that's in Nevada, let's say a Kinross, a Barrick, or a Newmont. But they have a lot of insider ownership, but they have decided to keep 100% exposure drilling the Campfire target. That says something. How much, what their conviction is. That's like, insiders don't want to give away any of the upside just yet, and thus are okay going into the highest risk portion, especially for Westward, for example. This is by far, their Campfire target is by far the flagship target and flagship project they have. They don't have they don't have 7 other projects to fall back on. Not saying that there's not other targets on the property, but by far this is, in the eyes of the market, considered to be the I have a hiccup. Flagship target. So that, again, that says something, and there's a lot of smart people involved with this, and Quinton loves it as well. So yes, this is, and that's the thing with these exploration stores here at least, including Phoenix, like I would consider all these flagship targets to be exceptional. Not run of the mill, oh, we have an exploration target. No, this is like, you know, tier 1 world class potential, tier 1 world class potential, tier 1 world class potential. I mean, porphyries, giant porphyries can be absolutely huge. Of course, Phoenix I would consider, well, given where the gold price is. I mean, if they found something real material, like if they would discover, you know, a few million ounces, let's say, of gold here in Finland, and let's say good grades, good width, etc., that could be worth, you know, also billions of dollars. Just look at Ikari, for example. So with the gold price being where it is, and add jurisdiction, you know, mineralization at surface and all that. In terms of endowment, does it need to be, you know, a giant porphyry? No, but the giant porphyries like take Cobrias, El Perdido. That's still, you know, in the Andes and in Peru, which is not a bad, or Argentina, I should say, which is not, you know, at face value the best jurisdiction, but this kind of price is so big that it doesn't matter, because there's a, you know, a bunch of world-class deposits there and mines. And I mean, just look at Philo Mining. It's at 5,000 meters at the border of, I think, Chile and Argentina, or Chile and Peru, and they got sold for whatever it was, $4.3 billion. So they are so big, the price is so big that it overshadows, you know, the location and jurisdiction and all that. Whereas obviously what Phoenix has going for it is that it's in Finland, near infrastructure, starts at surface, roads nearby, you know, the #1 jurisdiction right now in the world according to Fraser Institute. So you don't need the world's largest porphyry deposits to make a mine here. I mean, right. I hope you understand what I mean. So there's always context, right? It's the same with Kendall, for example, that given how good the location is for their Kendall project, near a town or city, close to infrastructure, they don't need this to be a Andean type copper giant for this to be worth anything. So the threshold for success is relatively low for a BC porphyry discovery here, which is again interesting, because that obviously skews the risk reward a lot. That if you have a relatively low threshold for success, and all the potential success is worth more because the infrastructure is so good, that makes it an exceptional target. And still, I mean, this or add $1-2 million, is that signaling like, yeah, that's an exceptional target with, let's say, low threshold for success and high potential success, and you have, as we know, a multinational coming in. No, I mean, that's not reflecting this at all. So, I mean, this is, as somebody said, still below. I mean, this is, in my opinion, a total sleeper. If there were 100 Red Canyons, I think I would be able to create an absolutely exceptional portfolio just having 1% in each. Because each one of them have, I don't know how many targets they have, 7 in Red Canyon, and all those projects, especially let's say Kendall and Scraper Springs, are absolutely huge. So they have, you know, tier 1 potential. So at face value, I mean, these have like 50 bagger potential. So you need 1 in 50 to work out, yeah. And that's kind of also the point then about diversification and, you know, the portfolio, that you could, even with high risk stores, I mean, if you could diversify enough, and they're so cheap that the upside is so big, upside potential is so big, you could have 50 juniors at 2% each, or 100 juniors or 1% each, and if you only need 1 in 2 out of 100 to work out to get plus minus 0, whatever, What if you think 10 out of 100 would have serious success, or maybe 20 out of 100? Imagine if you had like 100 juniors and 20 of them would, if you held them long enough, would like 20 to 50 bag. Oh, that portfolio would absolutely be a killer, right, in terms of returns, because like 20% of it would go up 20 to 50 times, and you only need 5 baggers out of those 20 to be plus minus even, right? That would be a really well-performing portfolio, and you made sure to get that the full risk reward because you were diversified enough that some of them for sure are gonna hit. But if you had if you own 2 Red Canyons at 50% each, for example, and let's say the chance of blue sky or significant success is 20%, on average you're not gonna have one win out of those 2. So you shouldn't be surprised then that, and let's assume they only had the Kendall project. That's actually an expected value of negative, because on average you need, what did I say, 20% chance. You need 5 to have 1 success, and if you only own 2, on average you're gonna have no success. So that's gambling in that case. And yes, if both of them hit, you would have the best performing portfolio in the entire sector. But that is still gambling. Again, that's not risk adjusted or expected value. That's not positive investing, expected value from a rational risk taking. That is in fact gambling. That on average you're gonna lose on that portfolio. And if you find 2 more to invest in after you've lost, that's on average gonna lose again. But the gambling portion is of course that if 1 hits, your portfolio is gonna do great. If both hits, you're gonna have the best returns in the entire sector. But again, on average, you need 5 stories with 20% chance of success to have 1 chance, to have 1 being successful. And then one of the bigger news items, first Nordic to combine with Mawson Finland. And this interestingly happened after the Beaver Creek conference. Usually, you want some big splashy news to come out before the conference. I guess they weren't able to get it done in time. That's the only reason I can see. And I mean, this is interesting. It's like I don't think it appears that may be understandable, but I think. I mean, I read the forums. I was discussing this news. I mean, I saw the news as soon as I touched down, basically in Sweden, and could dig into it when I got back home, and even on the way home from the airport. But the thing is that I was surprised in a sense that there was a lot of negativity. I don't know if it's mostly because of the, let's say, it actually started the day by trading up, and the financing that's proposed is done at 38 cents, and I think the shares were trading at 45 or something, or 44, and it traded up first, then it got slammed down minus 15. And I'm assuming that might be because, well, if you think you're going to get into the financing, and interestingly there's no warrants that I can see, which is great, because this stock doesn't need more warrant overhang, that's for sure. So if you have a position at 44-45 cents, and you think you can get in buy the same shares at 38 cents, that's obviously a arbitrage, and you'll make some sense on that if you plan to get in with good money or any money at all, really. I mean, that's still arbitrage, so that makes sense. If you think you're gonna get into the placement to sell that to buy in lower, I mean, at the end of the day, and it doesn't really matter in the sense that, okay, if it really matters if you own shares at 45 or 38 cents, I mean, then it's not a good case per se, right? Because you don't want that kind of low margin. It's like, yeah, it's a buy at 38 but not at 45. And the thing is, of course, it's like, okay, what's coming with that, let's say, dilution and merger and all that? I mean, I would think that, I think First Nordic's assets are worth more than twice what Mawson Gold has. That's my personal opinion. So let's say I would maybe, who wanted to see some more that, but at the end of the day, it doesn't really matter, because it's not like none of the companies are that large market cap wise. So I mean, I think the combined, what was the combined entity? I think it was like 270 million or something, or 250 million with the raise they will have like $50 million in cash. You're looking at an enterprise value around 200 million. That's nothing for, let's say, one PA project. One, Barcel is not PA, but I mean, some of the stuff is like PFS level, hydrological studies and whatever, but it's not officially at a PA stage. And then you have Uyervi, for example, and the Gold Line Belt. So I mean, that's nothing in the grand scheme of things. So it doesn't bother me, because the thing is also with this, we're getting the Mawson Finland backers involved. So they become backers, obviously, of the combined entity. And we're talking like, many people might not know this, but where is it? So Darren Morecombe is joining as a special advisor. I mean, the companies he's involved with, like Foreign Mining 1.66 billion, Southern Cross 1.63 billion. This guy is a serially successful company builder, and obviously one would think, looking at his other stories, which are closer to 2 billion than 1 billion, I think he, what's his vision? What kind of a market cap goal, let's say, does a guy like that has? And I'm pretty sure, since Mawson Finland is a spin-out of Southern Cross, and Pierre Lassonde is a shareholder of Southern Cross, Pierre Lassonde is a shareholder as well. So you're getting Pierre Lassonde, Darren Morecombe, and any other of the, let's say, friends these guys invest with. They're going to become backers of the merged company, and you can almost not ask for better backers than that. High profile backers, serially successful, and they're getting where's the Peter Breeze and Russell Bradford. So they're proven mine builders. They have billion and multi-billion dollar successes in their bag. And of course, one has to assume that the Mawson guys also like this. So you have, Darren Morecombe and Pierre Lassonde and whoever. They're like, yeah, this is going to add value. And you have even Taj Singh, who's not then going to be CEO anymore. He's planning to add $1 million in the financing. So he's doubling down with $1 million. So that's why I was kind of surprised that, there was kind of a lot of negative comments actually at this. And I don't think, let's put it like this, I would say this is for sure positive. I mean, just the quality of backers, and you have, how many juniors do you think, even with projects, have a mine building team getting in, like, at the caliber of these guys? That can't be many. Like that's the problem with some junior developers, why they're not getting, let's say, taken seriously, because the market doesn't see them as having mine building expertise, competence that they can't actually. You wouldn't want them to build a mine because it's so hard to build a mine. But I think, I think these guys, if we look at foreign mining, they're in construction now. That's a Darren Morecambe story. Southern Cross, I believe, they're going to push that towards production. Either of them might get bought out before that. But the thing is, like, I think Darren and the guys, they want this to play out. They actually want to build a mining company. And why else would you have people like this to get into it? And also I think then that it also suggests something that I believe this merged entity will have a higher shot at actually acquiring, consolidating the Barsele ownership. Right? Because from an easy way to look at it, it's like, okay, why does Darren Morecambe, etc., want to get exposure to First Nordic? Well, for the First Nordic assets, obviously. And if they wouldn't think there's any chance of getting that from Agnico, why tie them to that? So why get exposure if they think it's going to be permanently boring? Yes, there's a lot of exploration potential, of course, for sure. But I think it's kind of easy to see that I believe this whole deal is kind of implying that they believe there's going to be a good chance of getting it from Agnico Eagle. And that's why you need mine builders in that case. Not that Barsele is going to be a mine like tomorrow, but so they can start doing what's needed to build Barsele. And maybe they build Rajapalot, I think it's the name of the, Rajapalot project. So I think this has a equivalent production profile at 80,000. Let's say Barsele is somewhere between 150 to 200,000 ounces. So then you could theoretically, let's say, get up to 250,000 ounces per year if that gets going. That's probably going to be worth a few $1 billion, and maybe they have higher aspirations than that. We have the Oijärvi, and you can obviously make discoveries at the gold line trend. That's the whole point of the consolidation, gold line and First Nordic, that you have a 100-kilometer belt. So that, who knows? Barsele itself might get up to 4, 5, 6 million longer term, and then you add some satellite deposits. So just with this portfolio, I think they have already all the ingredients to kind of, on a long term basis, get this to 250,000 to maybe 400,000 per year. Now let's look at what is the people involved, assuming this merger goes through. Some of the best backers, some of the deepest pockets in the industry. One of the best mine builds around that probably most juniors would kill to have. And the geologist Gernot Wober, I think that's, if I'm not mispronouncing that, he's from Osisko Mining, so world-class geologist. And Nora, who's joining from Mawson, Finland, I've heard people say she's the best permitter in the Nordics. So you have basically all the things covered and all the ingredients to actually build and, get mines permitted, get mines built, and get mines operating. And with the added ammo of everyone, involved. And even if they don't get Barsele anytime soon, they will have $50 million to do something with. And the market cap will be around 250. It's like, okay, for $50 million, how much can they drill? They can obviously advance the Finnish project. They can do a lot of drilling both in Finland and Sweden. So it's not, I don't think it will be boring. Obviously the crown jewel that would change everything is if this new merged entity could get Barsele. Then I'm pretty sure that would be absolutely the flagship project, and they would just immediately start to speed run that towards development. Because then you have like a tier 2 flagship asset in the gold space with these gold prices. They would be advancing, and who knows? I mean, if they have even bigger aspirations than that, they would, they might be aiming to create a mid-tier for all I know. But the thing is, I want to touch on some of the sentiment that's going around in the forum, and again, why I was actually really shocked at the amount of negative comments. That's like, yes, I mean, some guy, he's like a known basher. He's like, oh, there's no direction, yada yada yada. They haven't, execution was poor and whatever it was. Okay, I mean, I don't think you're fully appreciating how valuable it is to get these backers and this kind of a mind. I mean, I think all around, First Nordic would, or whatever the new company is going to be called, would be absolutely one of the highest quality, not just the assets, but like everything combined, would be some of the highest quality companies in the junior gold space. So to me, this isn't even close to being a negative event, and that's why I was so surprised that. But I guess that kind of comes with the territory. I mean, since the top in February, I think, of First Nordic, the share price has absolutely lagged the gold juniors, hands down, absolutely. That's been a big drag on my entire, portfolio or portfolios. So there's no question about that, and I've been frustrated as well. But the assets, the gold line and Barsele assets, I think they're, tier 2, potentially world class. I mean, given the amount of targets and all that. And the jurisdiction, Sweden is now number 6, Finland is number 1. And it doesn't really, yeah, I mean, if I had known that First Nordic would top and goes down to here, preferably I wouldn't have had any shares in it, right? But that's the same with any other story. Sometimes some work or performs, and then let's say the outperformers start to underperform, and then the laggers, underperformers start to outperform. That's how you get your total portfolio returns. I mean, if I could only be if my portfolio was always in something that was going up, I mean, that's what everybody's after, kinda. That's kind of a fool's errand. You cannot predict all the moves, etc. And the past doesn't really matter. This will be a whole new case, in a sense, post-merger. And if they are able then to get to buy Barsele from Agnico, because Darren is also heavily involved with Foreign. And I think the largest shareholder of Foreign is Agnico Eagle. So you would think, hey, they have some good experiences together, if you know what I mean. It's not like they have no idea who Darren is. So yeah, I mean, yeah. I hope this merger closes. I hope we have 50 million in the bank, and I hope after that they're going to be working on getting Barsele. I mean, I don't think this kind of a deal would happen unless the entities involved believes that this increases our chances of getting Barsele, and I do think then that would be the flagship project and the linchpin of the entire case. Outside of that, it's still cheap, The only thing would be, yeah, it would suck if 10 years from now they still don't have Barsele consolidated. That would absolutely suck. They could, of course, do stuff like, let's say, get Rajapalot into production and discover a new Barsele or something within the goal line, but obviously the shortest, quickest way to revaluation would be getting Barsele, because that's one of select few projects out there that could support that production profile, and I do believe that Barsele would have really low costs And I do think that the upside, the blue sky potential within the Barsland Gold Line belt is tier 1 asset. These are showed. Homerun also out with news, announces updated offtake agreement with Brazil Photovoltaico for the supply of high quality solar glass. So this is an non-binding offtake agreement of minimum 180,000 tons of solar glass manufactured in Belmonte, Bahia. Initial price for the solar glass is set to $750 per ton US. And you can obviously just calculate what that's worth in revenues. And Homerun has now announced 300,000 tons of solar glass offtake based on current ongoing discussions for increased new offtake. The number is expected to grow to 450,000 tons, which will exceed the model 1,000 per day plant capacity. So I mean, the hit on Homerun has been like, yes, there's a lot of LOIs, yada yada, a lot of non-binding, etc., etc. So it's like there's a lot of potential painted, a lot of potential, but there's no construction yet on a glass facility, yada yada. I mean, I believe that this is needed, to come up with a, let's say to be able to borrow for it. Let's say, I mean, if you went to a bank and it's like, hey, I would like to build a glass manufacturing plant, give me $250 million, and the bank's like, okay, how many customers do you have? It's like, we don't have any customers yet. So it's like, am I gonna lend you $250 million with no apparent revenues coming? It's like, in other words, like, am I gonna give you $250 million hoping that you're gonna be able to create a business out of that? I don't think so. So I think this kind of stuff, I mean, that's valuable for them to. Currently, non-binding aims to outline the basic terms of supply agreements. It does not create any legal binding. Blah, blah, blah. The parties agree that binding agreement shall supersede this agreement based on development of the BRFV solar module facility, and once the solar glass plant reaches a bankable feasibility study. So I mean, it's basically setting up the economics to then build a glass manufacturing plant. So again, yes, it's not non-binding, etc., but I believe stuff like this is critical to finance a solar glass plant, to then make these binding, because of course it's, I would say, probably hard to come up with a binding agreement when you don't have a plant yet. It's like, am I gonna or expect someone else to do a binding agreement with me about production when I don't have the a bankable feasibility on said production facility, and don't have the money to build said production facility? I mean, that's understandable. That would be quite hard to do. It's like, I go to a car manufacturer, let's say, hey, I'd like to, create a windshield suit. Let's do a binding agreement. And it's like, what do you have right now? Well, I don't have a production facility up and running. Or it's like, okay, well, so we're going on a huge leap of faith here. So I think even though the market doesn't really care about these, I would expect that to be, I mean, this is going to translate to something more tangible, let's say. Eloro Resources reports the longest and highest grade tin intersection obtained thus far in drilling at Iska project, Potosi Department, 230 meters grading 0.51%. I mean, this is a pretty big. I haven't checked the tin price recently, so I don't know exactly what this is in AU equivalents, for example, but I believe this is like, I mean, I gotta look that up later. Obviously, very beefy intercept, 0.51% tin. So, I mean, Iska is growing, no surprise there. It's a huge system. one thing you might have noticed, like the perception of Bolivia is increasing. I mean, look at Santa Cruz Silver. I think most of their production is in Bolivia. They're up to, let's see here, Santa Cruz. They're up to 836 million. And then we have Andean Precious Metals, also Bolivia, up to almost $1 billion. And you can see the ramping, let's say, as of late. So I think, I mean, these are valued, multiples higher than they were not long ago. Sure, the silver price is up and all that, and they were, probably very cheap to begin with. But silver is up, but it's like it's not up a ton. I mean, when was? Let's see here. When was silver? When was silver at? Let's say here, for example, 35. So yes, it's $7-8 higher. It's not meaningless, right? But it's not a double of silver price. So this was October 2024. In October 2024, Santa Cruz was at $0.50. It's now at $2.3. Andean was at $1.8. So these are up hundreds of percent. And I do not believe that the long-term value of their businesses have increased that much, just from silver going up $7 to $8, because silver could fall $7 to $8 next month, for example. Right? That's obviously a sector sentiment. Let's say being somewhat, maybe I don't think actually Andean Precious Metals is really a leverage play per se. Sector sentiment, and also I think Bolivia is looking better. I mean, you even had Rosbiri in a recent interview, talking about how Bolivia has been shunned, and it's actually one of their favorite, or that's actually one jurisdiction where they have produced uninterrupted, let's say, and that the perception is wrong, right? So that's probably has something to do with it as well. And obviously Eloro is in Bolivia. So there's some tailwinds here, and obviously it doesn't hurt when you put out intro like that. So hopefully Bolivia is going to turn more centrist right, and it's going to open up, and it's going to get even better and the perception and people's appetite for risk or appetite to invest in Bolivia is going to go up as well. Now I have very large exposure in Bolivia via San Cristobal. That's why it's like that is my largest position, and that's Bolivia. Hence why it's like I have all the Bolivia exposure that I can stomach in a sense. So nowadays I don't have a big position in Eloro, and that again it's like because I'm overexposed, let's say, to Bolivia. But that doesn't change the fact that, and I'm happy to see Bolivia is getting better, and this is a whopper of a drill intercept. So it's like I would expect Iska to become a mine. I mean, there's so much endowment at Iska, and I don't think they're close to flushing out all the potential here. I mean, some of this stuff could be small scale mined even. I mean, Bolivia is low cost jurisdiction. Yeah, I mean, I guess that's about it. I mean, there's been some other news. Arctic Minerals for example, and I saw just today that there's a sediment-hosted copper junior high copper, what are they called? Highland copper, I think. They appear to be getting 250 million from the U.S. Import Fund. Stillwater has been doing really well lately, and now today it was announced that the U.S. is looking at a $5 billion fund to invest in mining. Obviously, that's like 5 billion for a whole sector. That doesn't sound like too much, but still, I mean, it's incremental, I guess. And would I be surprised to see Stillwater get some grant, etc.? Absolutely not. I mean, they have an absolute huge system, large deposit already, a bunch of critical minerals that are deemed critical / strategic for the US. They have Glencore involved, etc., etc. Stillwater could provide a lot of critical minerals for the US, so I would expect this to one day also become a mine. And at that point, I don't think it's 95 million market cap is going to cut it. So, given how big the price is, given the the macro trends recently, given that Glencore is involved, given that I expect them to get some grant or something, even though it's up quite a bit from the lows here, but it's like 95 million. I mean, is that a lot? I don't think so. Again, if Glencore is involved, I mean, you could, and Denny Grober, the ex-Ivanhoe geologist. I mean, I don't think he would get out of bed unless he sees some major potential and he actually likes what he's working at. I bet he could get a job at any junior, basically, at least dealing with PGMs and nickel and what have you. So yeah, I mean, I think the context, let's say, of Stillwater makes it kind of obvious that this probably is not. I don't think this is an overstretched, overvalued, overhyped market cap at all, because again of the context. What would make Glencore care? What's gonna happen, or how much value? If, I mean, these guys got a few tens of millions or something in grants, for example, that's gonna be material to a 95 million market cap company, obviously. And then we have the increasing tensions, and as we saw again today, the U.S. added focus on securing critical minerals. So yes, let's come back in a few years. What's Stillwater going to be trading at that time? I don't know. I would not be surprised if it was materially higher than here. And they have a bird in the hand. They have a deposit, and I mean, they have some of the largest systems out there. I mean, they have a multi-kilometer trend to make discoveries, and I like that kind of stuff. When the, let's say, the upside potential, the blue sky is so large that you don't need to be accurate in the sense that, well, if I'm paying 95, I don't need to be. It's like, yes, the upside, it's definitely worth 130 million. So yes, I can see 35% upside. But if I'm wrong, it's not even worth 95 or something. I much more prefer where it's like, hey, I don't know exactly what's going to happen, but I know the context is suggesting and signaling that this could be a really big project, and if that happens, it could be multiples of what it's trading at now, and the margin of safety is that they already have a deposit, so it's not just pure exploration, for example. Yeah, maybe that's about it for this video. Again, I'll need to digest all the impressions from Beaver Creek. Got some new stories I'm actually interested in digging into. Maybe have a Zoom call with some company, for example, to get more up to speed, because it's hard to form conviction, etc., just from speed dating a 30-minute meeting, for example. Yes, thanks for listening. Consider me biased with any company I talk about. Assume my own shares of them. Assume I can buy and sell at any point in time. Some are banner sponsors, twice biased. Make up your own mind. Make up your own mind. If you don't see a case, absolutely don't buy it. don't buy or sell just because I like or dislike any companies. I'm gonna be wrong a lot of the times. You need your own conviction, basically, is what I'm saying. You're the only one that has access to your portfolio at all times. I don't share your losses or your profits. Some companies that are up that I don't own any in are up a lot, and I would wanted to own them. And some companies I own have not done too well, so it's like there whatever avoided underperformance if you didn't own them. So again, it's like I don't know exactly if I'm gonna lose or make money on a story. I'm just I'm just investing based on the risk reward that I see it, and typically I do I'm more inclined to talk about longer term plays where it's like give it 2 years. If it goes well, you could be up a lot. If things don't go well, at least you can only lose 100%, etc. Yes, thanks for listening. Bye bye.